Pfizer is a company which is going to change the world in the coming weeks and months with their new vaccine. But this was not something that Wall Street was expecting. Wall Street was betting on Moderna, on Johnson JNJ, AstraZeneca, at some point even via biotech, but not Pfizer. Because you look at the performance of this stock so far this year, before this announcement, you will see that it has not been so great. That's why I tell you, don't listen to these analysts. Of course, they are going to make predictions, but predictions should be made on real data, not on some rumors. But now that we have the data, we know for sure that Pfizer is going to make the vaccines. We know how many doses they already got in pre-orders. We can work on that. We can try to find out how much money Pfizer is going to make and then try to value the company. Because we need to understand, Pfizer is the second largest pharmaceutical company in the United States after Johnson Johnson. They make more than just vaccines. So we need to understand the whole Pfizer business, see how much this vaccine can impact their business, if it's going to have any impact at all, or it's just a small little thing which is not going to change anything. That's how we will be able to give a value to this stock to know if it is a good investment or not. Before we talk about Pfizer, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for 200 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. Let's talk about the vaccine first. Like we said, nobody was expecting Pfizer to be the first company to actually develop a vaccine that can be mass produced, that can be sold. But it happened. Pfizer already got a 100 million doses order from the US government. It's worth 1.95 billion US dollars. Pfizer did not get any money from the US government so far, unlike companies such as Moderna, Johnson Johnson, which got money to develop vaccines. So you see, this is a proof that the free market system, the free market capitalist system works without government intervention. You don't need the government to be here to be giving money. You don't need these lobbyists, these bailout monies. The companies, the private companies, they can do their job. There is demand for the vaccines. They are here, they have the money, they can invest in research and development, develop the vaccine, and provide the supply. This is market supply and demand, and it's working. So 100 million doses of pre-orders from the US government worth 1.95 billion US dollars. It means $19.50 per dose. The US government also has the option of buying 500 million extra doses. Other countries have pre-orders too. For example, the European Union had a 300 million doses pre-orders. But the price at which the European Union is going to buy those doses is less than $19.50. It's an undisclosed price, but they say it's nearer to 20 than 10. So we don't know. Let's say it's about $17. It doesn't matter. When we are going to calculate the intrinsic value of the company, we'll take a margin of safety. It doesn't matter if we make these small mistakes here and there, because we cannot be sure at 100%. If we look at orders from other countries, we can see Japan has a big order, the UK has a big order, even Canada has a big order. In the bear case, there will be about 600 million doses of pre-orders in 2021. But if we look at the bull case, because Pfizer tells us that they can produce 1.3 billion doses in 2021, this is the bull case. But the bear case is 600 million. So we as good investors, we need to look at the bear case, the bull case, and also a base case. With the base case, it's around the middle. We know the price of $19.50 per dose, so we can calculate what will be the revenues from these vaccines in the bull case, the base case, and bear case. I've calculated all of that, and then what's more important is for us to calculate how much free cash flow the company can make. Because revenues is important, but what's more important is free cash flow. How much more free cash flow the company is generating because of these vaccines. If Moderna makes a vaccine, it's not going to be such a huge margin for them because they cannot mass produce the vaccine. They will have another company which will mass produce it. For example, when we had the H1N1 pandemic and there was that drug from Gilead Center, Tamiflu, they were not the company that mass produced it. Roche was the company that mass produced it. Gilead Sensors only collected a royalty. But in the case of Pfizer, since they're the second largest pharmaceutical company in the world, they have all the equipment that can mass produce this vaccine. And they are going to do it because it will be more profitable for them to do that. The current margins of Pfizer, I'm talking about the free cash flow margin, is about 20 to 30%. But based on the sales of this vaccine, it's something urgent, and we know that it's new, and we know that there are some logistic issues with mass producing this vaccine so fast. I'm assuming that the margins on this is going to be about 15%. So now we can look at the bear, bull, and base cases for the free cash flow. And even in the bear case, Pfizer can generate $1.75 billion in free cash flow extra next year. This will be a 20% increase in their normal free cash flow generation. So even in the bear case, this is great for this company. You can find the whole analysis of Pfizer on my research partnership. It's totally for free, this analysis. You also have access to 150 lectures on investing for beginners. If you are interested, you can check it all out. I'll put the link in the description. Now let's talk about the business of Pfizer beyond this vaccine, because as we said, it is a much bigger business, a $200 billion business. Pfizer is soon undergoing a spin-off. They want to spin off a company called Upjohn. So this company is going to produce the drugs which are generic, on which they don't have any patent anymore. The patents already expired. One example of such a drug is Viagra. Another one is Lyrica. So these drugs were first synthesized by Pfizer, but now since the patent already expired, it makes no sense for them to keep selling it because it's generic, anyone can make it. So they are going to spin off another company, Upjohn, which will sell these drugs. So in the future, Pfizer is going to greatly improve on margins since all their drugs will be patented. If the drugs are patented, they can sell it at a higher price. So margins of Pfizer is going to increase. We say that the free cash flow margins was about 30 to 20%. Why did I use this range? It's because over the last 10 years, it was going down. So with this patent, maybe it's going to go up again to 30%. But now this raises an interesting question. What happens when these patents do expire? Because the patents on the current drugs they have are going to expire, let's say in 2025, 2026, are they going to spin off another company? What's happening here? The reason why those spin-offs are so important for Pfizer is because they are not growing anymore. You look at the company, the revenues, the free cash flow, the net income, the operating cash flow of the company, nothing has been moving over the past 10 years. It has been staying the same. The company is not growing at all. That's why they have to do the spin-off, because if they do the spin-off, it will improve margins and it will show that the company is growing. But there is one thing which is growing with this company, and it is earnings per share. This is because Pfizer has been buying back shares. Over the past 10 years, they bought back 30% of the shares outstanding. If they buy back shares, the company will grow. But now we as investors, we need to see if they can buy back these shares, because Apple can buy back shares. They have a lot of cash, they can buy back their shares. But can Pfizer do it? Boeing was buying a lot of shares back, but they were not in the right situation to do that. The airlines also. They were spending a lot of money to buy back shares, and now they are in a bad situation. So we need to look at Pfizer. Can they afford to buy back shares? Pfizer has been increasing their dividends. Can they afford to increase their dividends? They have a dividend payout ratio of already over 100%. They have a dividend yield of nearly 3%. So they are a great dividend payer. They have been on the Dow Jones Industrial Average, only recently replaced by Amgen this year. So we need to ask ourselves this question now. Can they afford to keep doing all of that? Because this is the only way that the company can grow. They cannot grow organically. Even if this vaccine comes out, we say that the bear case, it can improve the free cash flow, increase the free cash flow by 20%. Then what happens after 2 years? 2021, they are going to make and sell the vaccine. 2022, make and sell the vaccine. What happened in 2023? Who's going to buy the vaccine from them? This pandemic is going to be over in 2023. So we need to think about the long term. It's just not you're investing in the company just for the next 2 years. That's all. You need to be thinking about the long term. They really need to come out with something revolutionary that is going to change the business. For example, you look at a biotech company such as Amgen. Biotech and pharmaceuticals are not really the same thing, but they do mix up sometimes. A biotech company such as Amgen, the largest biotech company in the world, the only reason why this company keeps growing is that they focus on oncology, treatment of cancers, and neuroscience diseases such as dementia, such as Alzheimer's, Parkinson's. So these diseases are going to be more common in the future because people are living longer and longer. So the demand will be bigger and bigger, and they can supply it. But as far as Pfizer is concerned, they are making these drugs They make drugs for oncology, yes. They make drugs for other things, for vaccines. They make vaccines, yes. But they need something where they can grow. And here, selling these drugs for general public is not going to make them grow, especially for a $200 billion company. Let's come back to growing by buying back shares, by paying dividends. Last year, they spent $8 billion in buying back shares and $8 billion in paying dividends. They had free cash flow of $10 billion. So they are already spent $16 billion just to return money to shareholders, although they are making only $10 billion. And on top of that, they paid $22 billion in debt repayment. Because they have a lot of debt, so they have to repay this debt. So how can they afford to raise dividends? How can they afford to buy back shares? It's by taking a lot of debt. This company today has $61 billion in total long-term debt. That's a lot. And even though it may seem that the debt is not due in the near future, most of the debt is due after 2025, they still have to pay a lot of interest on this debt. And the debt eventually they will have to pay it. It's if not 2025, 2030, 2049. They have some debt I've seen 2049 at 4% interest rates. But every year they have to pay 4% interest on that. There is no way that this company can maintain such a high dividend, keep buying back shares, if they are not going to put themselves in a worse situation with the debt, if this debt doesn't get out of control. So I'm very scared about this debt of this company, and I'm not willing to invest in a company with such huge debt. You look at the tangible book value of the company, it's actually negative because most of the assets of the company are in the intangibles and goodwill. You may say, okay, nothing wrong with that. Even Johnson & Johnson is like this, but Johnson & Johnson is much bigger compared to Pfizer. So Pfizer is in a bad financial situation. This vaccine is just going to increase the net income, the revenues, the free cash flow for the next 2 years. That's all. After that, it's over. We are going back to square one. Yes, you will tell me now they are going to improve margins with this spin-off. It's true, but the margins are improving. That doesn't mean that the company is going to generate more revenues. The revenues are actually going to be lower because of this spin-off. Revenues are going to be lower, improve margins, maybe extra a few $100 million in free cash flow a year. That's all. So if you calculate the intrinsic value of this company, which I did on my research partnership, you can find it out. It's expensive. I won't give an intrinsic value of more than $80 billion for this company. And right now, the market cap is over 200 billion. I had to take a big discount rate because it's quite risky making an investment with a company with so high debt. This vaccine is really a game changer for this company and for the whole world. It's good they have made this vaccine, but it's only temporary. If you're looking for this as an investment for the long term, it's not going to happen. What is going to happen in the short term? Nobody knows. The CEO sold most of his shares on that same day that the announcement of the vaccine was made. Why did he do that? I don't know. If you're investing in a company, you want a CEO who has skin in the game. And now he doesn't have so much skin in the game. You look at, for example, Jamie Dimon, CEO of JP Morgan Chase. Most of his wealth is in JP Morgan Chase stock. If the company goes bankrupt, so does he. But this CEO, he's cashing out. Why? I don't know. I don't want to go further to make a further analysis who is this CEO, because I don't think just looking at the debt, it's no use to waste my time going deeper into this company. It's better to move on, look for other companies. So let me know in the comments, what do you think about Pfizer? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos here if you have missed them. Have a nice day and goodbye.